Hello everyone, this is Brooke, DeFi analyst from TID Research, and in today's video, I would like to talk about an interesting new feature from Boros, which is the strategy sections. So the strategy section on Boros help you to put together a fixed return funding rate arbitrage strategies. So in the past, in order to build its strategies, you need to manage 4 trading legs by yourself. However, right now with this new feature from Boros, you can just build up the whole positions of 4 trading legs with just one click. To understand how this strategies works, we need to first understand how the products on Boros works. So Boros is basically selling the interest rate swap in the traditional financial market. So for interest rate swap, for those who purchase the interest rate swap, we call them they are loaning the rate. And if they are loaning the rate, they need to pay a fixed amount, which is the amount implied APR here, while they can receive the online, which is the online APR here. So this is the online market is the BTC futures market on Binance. And the online APR here is the annualized funding rate. So if I want to go loan rate with the IRS on Boros, or they call it the yield units here. If I want to go loan, I'll need to pay the fixed mark APR here until the maturity. And during this period of time, I'll be receiving the online APR. So it means that if I'm bullish on the funding rate in the near future before the maturity, I should go loan. I should go loan rates because I believe that it actually makes sense for me to pay for 2% because I believe that in the next few days, probably before the maturity, the online APR will be higher than 2%. So that is why I want to go loan. So if I go short, on the other hand, I'll need to pay the fixed APR here. Well, I'll need to pay the online here while receiving the fix. So it means that if I'm bearish on the upcoming development of the funding rate, if I believe that the funding rate will go further lower, I can go short on the yield units. And then in that way, if the online APR stays below the market APR, I'll always be paying less while receiving more. So that is what happened if you go short the IRS or the yield units on Boros. So that is how this instrument works. And then we need to understand how this is useful for the yield farmer, because so far it looks like a directional bet. So let's say if you're holding the purse positions, because if you're bullish on the BTC markets. However, you're bearish on the BTC market, so you're holding the short purse positions. However, the current funding rate is like negative. So it means that when you keep your short position open, you'll need to pay the funding fee. But you don't like that funding fee and you want to lock in the funding fee. And then you believe that the pay for 2% actually makes sense because you believe that the funding APR might go further lower in the near future. So for that, it means that it actually makes sense for you to add the loan rates yield units on top of your perp positions, because in that way, you'll get to lock in your funding fee. Because for your perp, you're paying the online APR. However, for your loan, you are receiving the online APR, so they cancel out, and you only need to pay fixed, which is the 2% here. So this is especially useful if you have a directional view on the online market. However, you don't want to be exposed to the volatile funding rate market, because funding rate can spike up to, for example, 30 to 40% or even 100% annualized from time to time. So that is one of the biggest utility for the yield units on Boros or the interest rate swap. So right now we understand how this yield unit works. We can look at how the strategies works. So this is the breakdown of the strategies. The idea is actually pretty simple. The funding rate for the same online, for example, for BTC or ETH, can be different across different trading venues. For example, it can be higher on Hyperliquid and lower on Binance. And in this case, for the ETH perps, the funding rate is actually higher on Gate perp market and lower on Hyperliquid perp market. So for people who want to arbitrage the spread, they can short the perps. They can short the perps on the Gate, while long the perps on Hyperliquid. So in that way, they will have delta neutral positions while farming the spread in between. So they'll be receiving 0.05% of the funding fee on Gate while paying 0.035% on Hyperliquid. So that is the spread there. However, funding rate can shift. So we'll need the Boros yield unit help us to transform the floating fee into the fixed fee, so that we'll need to add the yield units on both legs. So this is the diagrams here shows how the strategy works. So for example, right now we already know that we need to shorts. So this is the ETH. So the funding rate on gate is higher, so we need to short ETH on gate, and then we need to long ETH on Hyperliquid so as to hedge the exposure to ETH. And then we are delta neutral to the ETH price, but we are not delta neutral to the underlying funding rate. So that for the exchanges, we loan the ETH. We need to also add a yield unit. So we need to loan a yield unit, so that if we loan a yield unit here, so you can see we loan yield units here, we pay the fix and receive the float, so that in that way our funding fee liability is canceled out. So we're able to lock in the fixed APR on one leg, and on the other leg we short, because on gates we're shorting the ETH perps. So it means that we're receiving the funding rate, and then so it means that we'll need to loan the yield units, and then in that way we're also able to lock in our funding rate. And right now you can see that the loan IRS and then the short IRS, there's a spread here. So it means that even after we lock in the funding rate on top of the perps, there's still the fixed APR on both legs. There's still a positive spread. So that is how we make our revenue. And then what's even better is that if you are confident with your margin management, you can even add the leverage on top. So if you add leverage on top, the max APR you can get is the 28%. So that is how this strategy works. And the best part about Boros is that once you connect your exchange accounts here, you can complete the build up of the whole transaction with a few clicks, one stop on this page, and then farm the APR while also able to monitor your positions and avoid liquidations. So that is what this strategy is about, and then this is why this feature is very useful and attractive.